Estate planning is an important consideration for many individuals and families, and one powerful tool that can be used to reduce or eliminate estate taxes is a grantor retained annuity trust, also known as a GRAT. In this video, we'll explain what GRATs are, how they work, and we'll see an example to compare different strategies and how you can maximize the benefits for your heirs. If you still haven't watched our previous videos on GRATs, I strongly encourage you to do so. So let's get started. A GRAT is a financial instrument used in estate planning to minimize taxes on large financial gifts to family members. Essentially, an individual makes an initial contribution to a GRAT, and the trust pays back that contribution plus interest over the trust term. At the end of the trust term, the remaining assets are distributed to the beneficiaries tax-free. When choosing a strategy, there are three popular options: not using a GRAT at all, a single long-term GRAT, and multiple short-duration GRATs, also known as rolling GRATs. To compare these strategies, it's helpful to look at the total returns and taxes from each over the same period of time. As an example, if we assume a market rate of return that varies by year, an IRS discount rate of 3%, and an initial funding amount of $24 million, the expected returns after estate taxes for each strategy in 10 years would be as follows. Option 1. No GRAT. Around $36 million will be gifted to your heirs, with you paying around $8 million in estate taxes. Option 2. Single 10-year GRAT. $40.7 million will be gifted to your heirs, paying around $3.3 million in taxes. Option 3. Rolling GRATs for 10 years. Almost $44 million left for your heirs, entirely estate tax-free while not using all of your lifetime exemption. Where do all these numbers come from? We'll now take a look at each strategy in detail. I strongly recommend you to pause the video on each option to understand in depth the numbers. Let's dive in. Option 1. No GRAT. Without estate planning, you'll owe taxes on every dollar above the estate tax exemption of $24 million, assuming you are a married couple. And that would be around $8 million after 10 years. So from $44 million, you'll get to gift $24 million estate tax-free, and for the remainder you would pay around $8 million in estate taxes. You'll be gifting to your heirs a total of around $36 million. Option 2. Single 10-year GRAT. Hurdle rates per year are based off the first-year asset value. Assuming an initial funding of $24 million and an IRS discount rate of 3%, results will look like the table below. As you can see, no assets are passed to your heirs until year 10, where remaining assets in the GRAT will pass tax-free after the estate tax exemption of $24 million and the single annuity payment. In this example, you'll be paying $3.3 million in taxes, and around $40.6 million will be gifted to your heirs. So from the $44 million in total, you'll be gifting around $40.6 million, $36 million of that will be estate tax-free, and for the remainder, you would pay around $3.3 million in estate taxes. Option 3. Rolling GRATs for 10 years. Unlike the single 10-year GRAT, the hurdle rate here is based on the starting asset value of each GRAT. Assuming the original annual growth rates and an IRS discount rate of 3%, results will look like the table below. With this strategy, you will be gifting almost $44 million for your heirs, entirely estate tax-free, while also not using all of your lifetime exemption of $24 million. In conclusion, GRATs are a powerful estate planning tool that can be used to reduce or eliminate estate taxes when passing on assets to the next generation. As seen in the example, the rolling GRAT approach yields the best outcome, allowing you to transfer assets to your heirs' estate tax-free. Whether you choose a single long-term GRAT, multiple short-duration GRATs, or no GRAT at all, it's important to consider your specific circumstances and goals when making a decision. Remember that a GRAT is just one of the many tools that can be used to protect your assets, ensure your beneficiaries are taken care of, and minimize the tax burden on your estate. All right, that wraps it up. I hope you liked the video. Now, a quick word about Valur. We have built a platform to give everyone access to the tax planning tools of the ultra-rich like Facebook founder Mark Zuckerberg and others. We make it simple and seamless to pick the best strategy, set up and administer these structures at a fraction of the cost of competitors. If you still have any questions, you can visit our website at valur.io. You can read our content on tax planning strategies, play with our online calculator to discover your financial gains by picking different trusts, or schedule a call with us.